Welcome to Sachs Realty's Tuesday Night Podcast, where we talk about anything and everything real estate. Each week, we deliver expert information enabling you to make better informed decisions while keeping more money in your pocket. If you're interested in real estate, this is your show.
Hi, everyone. Welcome to another Tuesday night. Go ahead, Todd. It's all you.
Wow, man, boy, we're just jumping to it. It's going to get hot in here tonight. Let's go. All right, sure. Guys, welcome to our Tuesday Night Podcast. I won't take Melissa's thunder away, but we have an amazing show for you tonight. You guys are going to love it. It's going to be great information because everyone wants to know what's going on in the real estate market, and we have multiple states covered here tonight. I am going to talk about Maryland tonight, which I know a lot of our listeners want to know about Maryland and the DMV, because a lot of times we talk about other areas of the country, but we are bringing Florida to you tonight, Massachusetts to you tonight, Arizona to you tonight. So it's going to be exciting, guys. Sit back, relax. This is live. We love your questions. We're going to make sure that everybody's information is posted in the show notes. And guys, these are YouTubers too, but something nice that you should know about tonight's show. Myself included, we are working active agents in the industry. So a lot of times I have YouTubers, maybe they're agents or loan officers, but they do a lot more YouTubing than they do, and I'm not knocking them, than they do actual transactions. Tonight, we're talking about transactions. We have real boots on the ground tonight. I'm excited about it. Melissa, introduce our panel.
Thank you so much. And thank you, realtors, YouTubers. This is such a treat. And Todd and I were thinking, what an awesome idea to get, real perspective from different parts of the country. So we have noune.karapetian. She's in the Boston area in Massachusetts. We've got McHone. He is from Arizona, Phoenix area. And then we've got Igoe down in very hot and spicy Florida. So we're going to dive in right here. And Nouné, tell us a little bit about who you are.
Sure. I'm a realtor since 2011, a full-time realtor, and I work with Compass. And, I sometimes people call me the singing realtor because I used to be an opera singer and singing leading roles with local opera companies. I loved it, but I love real estate more right now. And I love putting deals together. Whenever somebody says, I don't know if I should work with you, I tell them I will sing for your closing. And every time it works like a charm. So I love putting deals together. I love negotiating. It's a fabulous profession. Every day is different. And check out my YouTube channel, Boston Area Homes by Nouné K.
I'm going to ask you to sing something right now. I want to hear a little.
When you can hear it in my voice. I have
there we go.
People say you have a singer's voice.
Perfect. Well, thank you.
I hope you can say that about me. I have a singer's voice. I mean, I'm pretty operatic myself. I mean, I must say.
Yeah?
Oh, yeah.
I want to hear you.
Maybe we'll all sing. Maybe we'll all sing after the show.
Yes, at the end.
Rick McHone, thank you for joining us tonight. And I know that you are traveling. So tell us a little bit about who you are.
Yeah, I'm an agent in the Phoenix metropolitan area, actually the whole valley, and I call it Rick Helps Real Estate, and this is my Rick Helps Real Estate traveling office, and I'm heading on a trip. I'm actually going up to my 50-year class reunion in Washington State, so I'm going to escape out of the heat, and today is day one of the road trip, but I've been a realtor since 2012. I have spared my clients any of my singing skills. So I don't have that going for me, but it's an exciting market, and we've just had these wild swings. So it's kind of been fascinating and stressful at the same time to watch what's been going on in the market. And this is a great format. I really appreciate you guys having me on. So
absolutely, we're super happy you're here. Thank you so much. Chris, let's hear about what's going on in Florida. How are you?
I've been waiting for this moment all my life. Hold on. Yeah, it was a perfect setup. I couldn't help myself. So I'm a boots on the ground operator of a high performance team down here in South Florida. I primarily am based in South Palm Beach County. I was a stockbroker for 20 years, so I often will talk about leading economic indicators, leading news events that I see happening that I suspect will repeat patterns that I've seen before. I've been through every bull market, every bear market, every global economic crisis in my stock brokerage career. So I really kind of lean into that while I share the truth about what's actually happening right now in the housing market. So I'm hoping to provide some value today and have some fun.
Yeah. Well,
Yeah,
we're
we know,
all excited that all of you are here.
Yep, guys, we really appreciate you being on the show. And as many of you may know, I'm from Maryland. I have a real estate brokerage here in Maryland, and we serve really about 9 major markets in and around Baltimore and D.C. We're going to dive into some of those. I know all of you want to talk about some stats of what's happening in your area. I think the biggest thing that we're experiencing right now, which I don't know that any of us predicted. I mean, when we were talking about, the housing market shifting like it had, everybody was focused on interest rates. We're in such an interest rate sensitive industry because people have been buying payments. I mean, really since after World War II, when Jay came out and, really started extending mortgage terms for borrowers and reducing the amount that a borrower needed to put down, the focus really has been for decades the monthly payment. And as we know, being in the industry, serving the industry, and the golden rules of real estate besides location is buy low, sell high. That not only goes for the real estate investor, it also goes for homeowners, because sometimes, Chris, you were a stockbroker. Sometimes the home is the only investment people ever make in their lifetime. They don't have opportunities to buy stock. So, they're banking on a home appreciation. And I think for the first time in a long time, we're starting to question if it's really an American dream. If buying the house at these high prices and then paying the bank so much in mortgage interest payments, and looking at a $400,000 house, it's $1.2 million if you stay there, over 30 years. We really start to question, with repairs and things like that, where is the affordability? So, guys, we want to answer your questions tonight. We're hoping that you will comment them in. But if you're watching the show and we're not live anymore, certainly go ahead and comment. I'm sure our panel will be glad to visit the show notes, the comments, and get back to you and sort of answer your individual needs or questions as it pertains to your state, if they're covering that. So, why don't we just kind of dive into that right now? We'll just kind of go around. We'll spend a couple of minutes before we take some questions and I'll go last and just kind of talk about some market stats. Melissa, you're going to be looking at these questions and kind of guiding us along.
I am. Yep.
So, want to start with Nouné? Nouné, you ready to dive in about
How about I go second this time?
All right, second. All right, how about Rick?
Hey, no problem. I'll dive in with both feet. It's certainly, I agree with you, everything you just said. It's everybody's questioning real estate, but I've never seen a time either where I've seen so many people waiting for something to change. You've got people waiting for the rates to change or waiting for prices to adjust, but there's a high level of people waiting in the wings, if you wouldn't. We're in 2008. I don't ever recall anybody saying, well, I'm waiting for a crash. There was none of that. Whereas today, it's viewed as such a common repeating occurrence that people are waiting for it to happen again. And on our market, when rates went up and doubled and went from 3 to 6 and then up to 7, everybody headed for the hills. Every iBuyer investor and people that saw their estimate on Zillow said, let me grab it now because this can't end well. And so our listings went up to like 19,000, where we were sitting down at around 5,000. So they took off. And then December 31st, we saw the highest number of expired listings I think I've ever seen in this market. People couldn't get their asking price. And inventory has been dwindling ever since. The iBuyers were sitting on, like Open Door, were sitting on huge amounts of inventory. And now Open Door only has 230 homes on the market, where before they had 1,800. They just had a fire sale. It was easy to negotiate with them, and we were trying to scoop up a bunch of those as well, but they came in too hot. I don't know what they were thinking, and Harvard will probably study it later on, but right now we're sitting in February. We had about 3.7 months of inventory, and today we're back down to 1.7. And every week that we look on, we're losing about 50 listings a day. Our sales are extremely low when you compare it to the past 3 years, which is probably a good thing because it was just way too hot. And none of us liked going out there. And I called 2021 the year of the buyer beatdown. I mean, you were putting in offers, you weren't getting accepted, and the ones that were being accepted were ridiculous. So I'm hoping for some sense of normalcy. And
Rick,
Well, that's not what's happening here.
Yep. Same thing
Yeah.
here.
Chris, before we dive in, if we could just with Rick, CoStar just published, and I don't know if you're aware of it, but CoStar just published an article that says Arizona County leads the nation in population growth for the third straight year. Is it Maricopa?
Yeah, Maricopa County was number one in the nation in 2022.
Yeah.
And
so where are they living?
Well, they're buying all over the place, Todd. Scottsdale is obviously the most popular. It depends on where they come from. California loves Scottsdale. That's our number one source for people coming from out of state. And then it's Washington State, and then it's Illinois. After that, it gets diluted down, but it's a lot of Midwest people trying to escape the winters. California escaping a lot of things, and but they aren't that particular. We have some people from California come over and go, boy, when I look at what I can get for $800,000, I can't believe it. And they'll get a nice 5-bedroom home with a big pool, where in California, $800,000 you're in a trailer park. So that's very appealing to them. But we aren't seeing as much of that now. Unbelievably, a lot of our buyers that I'm seeing now are local.
So you're not seeing as much domestic migration.
No, because I think it all depends on the state. And California is probably having a much harder time moving their homes than they did in 2021 and 2022. So that's probably why that's slowed down. Seattle's picked up a little bit, so we may see some of them coming down. So we'll slow down a little bit in the summertime because nobody likes to buy a house when it's 117, and kind of hard to get friends to help you.
It gets hot. Well, speaking of heat, I mean, we can see here, when we're talking about the Maricopa leading the U.S. population growth for the last 3 years in a row. You can also see, guys, if some of our viewers live in some of these other counties, Texas seems to really dominate this U.S. chart here. It seems like, a lot of people are flocking to Texas. And, in fact, I saw a neat article where despite the home prices, some of these counties in Texas, they're saying are still a bargain. I mean, especially when you get to like Tarrant County, I heard that's poised to be like, amazing growth. Those people out there listening, that pricing is just starting to grow out there. A lot of demand. And before we move on, it's interesting because I found another article because Phoenix, Arizona gets kind of like kind of like a bad rap as far as, everybody is, and I don't mean the area itself. Of course, I question whether Arizona was ever meant to be lived in. Honestly, it gets so hot. I don't know. If you want anything green, you have to continuously water it or you won't have it. But, beautiful area. But, interestingly enough, there was an article that was posted where Goldman Sachs says the New York Post first obtained a memo from Goldman Sachs, and this was earlier in the beginning of the year, that it said 4 U.S. cities, including Phoenix, could see a seismic crash like 2008 Great Recession in the coming year. And then it went on to mention that there's 3 other cities: San Jose, California; San Diego, California; and Austin, Texas. What do you think about that?
Yeah, I read that article, and it's one of those things where I like to point out that the headlines don't match the actual commentary. So the headline said, we could see this seismic crash, but then when you get down to the devil in the details, they kind of said, but they may only go down 6%. And so at the beginning, when you started looking at November, December sales, the word crash was on everybody's lips. When you actually start looking at the data and remove yourself from the headlines, you could see that prices were not going to crash. Now, there's always some black swan event that can swoop out of nowhere that can completely change the dynamics of the market. But you can't have prices come down when inventory is coming down and sales are staying either flat or going up. Until that changes, that article doesn't mean anything. And I don't know what made them think that, but even in their writing, they didn't match what their headline was. So it was kind of confusing when I looked at it.
Yeah. Do you think that when they're talking about that, I think of 2008, I think of a lot of job loss. I think the foreclosures. I think of, the last couple of years, people paying astronomical prices for housing, buying houses with being qualified with 2 incomes, and the threat that if one income, they're one payment away from being delinquent. Do you think, is there something that maybe, if you think of, inventory's down, but can you think of something that could affect, who's your big employer there? Who's driving the forces? The government? What, government jobs? What is the major employer in the Phoenix area? Who?
Todd, that's a great question. In 2008, we didn't have any diversity. We had tourism and construction. And construction was acting like a perpetual motion machine. They kept building houses, and that was spurring the economy on. And we're looking, going, but nobody's moving here. You just built 200,000 houses. We only had 10,000 people move here. And so all the indicators were showing that this is going to end badly. Well, since then, our economy has changed dramatically. We're very high tech. We're very strong in distribution warehouses and manufacturing. You drive up the new 303 freeway, and there are warehouses that are blocks long, and they're full. And the chip industry is expanding like crazy. So that's the good thing. We still have strong tourism. We still have a strong healthcare system. But what worries me is 2 industries. One, the chip industry. We've got Intel expanding like there's no tomorrow. And you've got the Taiwan chip plant coming up in North Phoenix that's going to employ, I think, a minimum $90,000 a year job. And most of them are going to make over 6 figures. And it's developing that whole area. The other one is electric car battery production. And that, I don't know how much legs that industry has, to be honest with you. I think it's a grand experiment. At the same time, you've got all this development in hydrogen coming along, so I could go on for hours, but that one makes me nervous. Now, if something turns where we do have a major recession, not a minor recession, because we can survive that. We've done it many times. I've been through several, and but I've only seen one crash. And but I think we can have a recession and withstand some headwinds. But if you look and see that our level of debt right now, I personally feel that the debt bomb has been lit. I just don't know how long the fuse is. So if that all implodes and layoffs come along, you're probably going to have more issues than just the equity in your home. So I think it's going to take something pretty big to even come close to using the crash word in the Phoenix market.
And to jump in,
appreciate that
if
update.
Goldman Sachs was the one who put out that article, it's also interesting that Goldman Sachs has a ton of money sitting on the sideline waiting to jump in on whatever that crash might look like so they can capitalize their investors. So I question the source. I mean, there's tons of misinformation out there, and that's really what I'm committed to trying to pop the illusion of, because I want people to be empowered with the truth in order to make the best decisions for themselves, their family, and their financial bottom line. But if Goldman Sachs said it, doesn't mean it's true.
That's right. All right, now, Nouné, you're up.
Yes.
You said second, so we're giving you that opportunity. Tell us what is going on in Massachusetts.
Okay, so Massachusetts, very, depending on the location. When you look at Boston and the close suburbs, the market is absolutely nuts still. We were hoping that it will normalize by now. The winter was pretty slow. The fall was slow of 2022, but now the market is crazy again. If you are working with buyers, it's almost impossible to get your offer accepted. You have to kind of give your firstborn to the agent and to the sellers to get your offer accepted. Clean offer, way over asking. Of course, it depends where the house is, but basically Boston and the close suburbs, the market is very hot. It's a huge seller's market. 1.1 month of inventory right now. So, and if we look at the historical inventory levels, actually, if we can look at chart 1 that I have of single family home inventory, you'll see that in March 2013, we had at this time in March 2013, we had 21,696 houses for sale in Massachusetts. This year, we had only 4,157. So you can imagine with that type of discrepancy, what's happening with the market, because, family formation has been on the rise, but the houses, the construction of new houses or inventory has been on steep decline. So obviously that's going to push the prices up and make the seller's market even crazier than before. So there's no rest for real estate agents, basically, and for the buyers. It's very frustrating for the buyers. But if you are a seller in this market in Massachusetts, in those right areas, and if you have a sexy kitchen and your house looks, it's like 5 years old, it's considered new by Massachusetts standards, and it flies. It just 5 days and it's gone. So very different from what you would expect it would happen right now with higher interest rates. And days on market are slightly longer. If we look at the chart that I have, which chart is it? Number 4, I think, or 5. No, the one before that actually decreased by 8.3% the days on market for single families and by 5.5% for condominiums. So it's shorter time, it's higher prices. And if you look at actually, let's look at chart number 6, I think. Yeah, you will see what's happening in Massachusetts. So this is for just 1 month. So yesterday I pulled that out. So from April 8th to May 8th. You can see that the average original price compared to the sale price is usually either 100%, 103%. They sell for more than asking. The price growth now is smaller than it used to be in 2020, 21, but still we're having price growth. We don't see some states are seeing prices crashing, houses staying on the market. We don't see that yet, maybe. I'm not sure. But this is the situation at this moment. Because of low inventory, that's what Massachusetts is facing.
Yeah. So I just read an article that where you're from, they just passed some laws. Are you familiar with that about increasing the density in in your city to where they're actually I think it was just passed. The article is from the New Yorker. It's headlined: "A Massachusetts town leads a way out of the housing crisis," and it's talking about Lexington. This is brand new stuff. This is April 19th, 2023. It says that Lexington is the first town to meet its obligation under new state law that requires towns to allow denser housing along public transit corridors. I mean, what do you think? I think of, the Northeast and probably a lot of the comments that we get from our audience really talks about the Northeast as being probably like one of what they would think of like the least affordable places to live.
For sure.
I mean,
yes.
Do you agree with that?
Yes. Northeast seems to be, West Coast and East Coast, right? Both coasts are very popular, and in Massachusetts, there are so many jobs, and it's such a varied industries that live in Massachusetts that a lot of people are migrating to Massachusetts for jobs. Basically, it's education and jobs.
What kind of jobs?
So the jobs are tech industry is huge in Massachusetts. Biotech is growing like crazy. In recent months, though, a few biotech companies closed because they were growing a little too fast. Medical field is huge. Education, universities is huge. Insurance, also finance and banking is also a huge industry in Massachusetts. So there are so many varied industries. The economy is extremely strong. Actually, it came out as the most prosperous state in U.S. for the last decade by one of those statistics indexes that they did in London. And that's why a lot of people are moving here because of either they got a promotion or they got a fabulous job that they cannot refuse. So they come here and then they deal with the housing situation, which is pretty difficult.
So do you have much new construction?
Very good question. So I just looked today, and for the last month, in Massachusetts, we had 2,600 something homes for sale that sold. Actually, they closed, and only 176 were new construction. So that's a very, very low percentage, very low number. And usually those new houses are not in Boston or close suburbs. They were in Worcester, which is central Massachusetts. They were on the borders of New Hampshire and Vermont and Rhode Island, in Cape Cod. So we don't have a lot of new construction. And when people are moving from West Coast or Arizona or Texas, I usually prepare them first. I tell them, you know what, you have to be ready for old houses. People from New England, they know all the houses are usually old. Sometimes they got renovated, but there's a lot of old stock, old inventory. So they say, yeah, we know. But then when they come and see it in person, they're like, oh my goodness, I didn't expect this. Their expectation is so much higher than what the reality is. In Arizona, maybe.
Are they distressed?
They are. So, I wouldn't say the properties are distressed. People are stressed, yes. But the properties, they're not in horrible condition. They are just, maybe it was built in 1890, and then it was got renovated.
Kitchen was done in 1935. Not too bad.
Well, sometimes
It's newish.
If the house was built in 1950 plus, we consider that, wow, this is a newer house. So nothing is ancient, at least. So
I was comparing a house today from 1915 to 1930, and I was like, there's two comps on the market, and I'm like, wow, we have like a really nice house. It's from the 1930s. This comp is from 1915, and you could really see the difference. But no, this house was completely remodeled too. Both of them were actually, but you could still tell the difference in the shape and the 15 years made a lot of difference.
Builders usually, it's very common here to gut renovate it. We call it gut renovation, but it's basically just leaving the studs and renovating everything else. It's very common here to do that. That's why when I looked at completely new construction, I couldn't find many, but many houses are going through that type of renovation, and then they look pretty good. I mean, if you didn't know, you would think it's a new house, but it's not.
Yeah, well, boy, I tell you, we could talk all. I've ripped a couple houses down myself in my day. Down to the studs, down to the ground. I start out, renovating, and it's like, just take a bulldozer to it. But, it's fun doing it in some ways. But if you're looking to do it for profit, it's not so fun because when you start opening those walls up, you realize, man, you have a lot of structural damage, termite damage, and things like that. But well, that's. All right, well, we appreciate the update there. Let's move on to Chris. Chris, man, Florida, dude, you guys are like, man, on fire.
Florida has absolutely been on fire. And the state of Florida is so massive that a lot of times when people reach out to me, when they talk about what's the state of the housing market, it's, well, which market are you talking about? Because each market is going to trade completely differently than the next, and there's always going to be a different supply and demand variables that exist. But overall, the state is we've got 1,400 people who move here each day, so there has been a mass migration from Illinois, from New York, from California, from Canada. During the frenzy, it was from everywhere, and I think they talked about it and spoke about it a little bit more earlier, that it was so insane. I mean, it was the worst market for me to be in because I like to negotiate. There were no negotiations. It was, you don't get to see the house. You just send in the contract. I mean, immediately. You like the house, you think you might want to buy it? Great. Send in your highest and best offer immediately. They've already got 50, waive every contingency, have an escalation clause, be prepared to do whatever you have to do in order to get the house. And it was maddeningly frustrating from my perspective, but now it's starting to become a lot more fun because we're starting to see the inventory stack up. The supply side is definitely increasing. New listings, however, are not. So new listings, people don't want to trade out of their 2, 3, 4% mortgage interest payment into a 6, 7, whatever the future might hold. So there's a shortage of new listings. And like Rick mentioned earlier, price is going to be set by supply and demand every time. And until that corrects or balances out in a way that's meaningful, it's going to be, single digit growth across the board, pretty much in every Florida metro. But what I'm seeing now is volatility start to come into the market in terms of pricing. So it's been basically 2 years of double-digit gains on average and median sales price in every metro. And now I'm starting to see some anomalies come in where you'll see median sales price may be on the uptick, average sales price may be on the downtick, or believe it or not, the inverse of that, which you would think would be impossible, but it happens. But you've got a lot more leverage if you're looking to buy a home, depending on which metro you're talking about and where you're at.
Yeah. Well, you're from Boynton? How do you say?
So I'm in Boynton Beach, yeah. And so South Palm Beach County is primarily where I focus on. But I also cover every metro within the state on my channel because there's been such an amount of misinformation and kind of like fear mongering that I feel committed to kind of debunking that narrative. I want people to know the truth. I want people to get the best deals. I want them to be able to negotiate the right way. And if you think it's one thing and you find out it's another, well, you might be in for a surprise.
Well, I found something I thought was interesting that was pretty recent in Southern Living. They posted this article about Boynton Beach, population of 76,000, about 832 in the Atlantic coast, South Florida, right? Located in Palm Beach County, this coastal town is known for its public beaches and golf courses. Sounds like a real poor place to live. It's a lot of retirement living styles to choose from. You look, first of all, you look a little young to be living there. I guess you're selling everybody their properties, maybe. But geez, I mean, I guess, you know what's interesting I found? When we dive into the data, and I spent some time doing this today in our 9 markets, and I'm going to show you some of that. But what I found is that the things that are really high, real high priced are like condominiums. I mean, people are like, there's like a huge demand for condos, and those prices are going up. Where single family houses in our area is weakening. The market is softening. I mean, I have stats to show it, the real stats, first quarter comparing year over year. You know, some of the data is conflicting. Of course, I don't know where data. I mean, data. I mean, you know, like, how do you get real data, right? Especially when we're looking backwards at every freaking thing that we look at. We're in the real estate industry. In fact, we had a meeting recently, our sales meeting, and we brought in the brand new rep for our MLS, that poor guy. And I think after we finished, you know, after we had our way with him, basically, tell him how frustrated we were on some of the things. And maybe you guys have the same, you know, and if you're listening, buddy, hey, look, I'm sorry. You know, I don't know. Sometimes I just, you know, say what, you know, my grandmother used to always say to me, Todd, must you say everything that's on your mind? But anyway, one of the things I said was, why is it? Now, Chris, you're in the stock market. You can go on. I can see what stocks are doing up to the second, right? If I want to sell a stock, buy a stock, I can set it. I can do whatever. In the real estate business, why do I have to wait 15 days after a month closes to get data? Well, they say, oh, well, it takes a while for the real estate agents to load it up. We got to be patient with them. Bull. We get fines if we don't load it up, or, you know, but they give us like a warning, and then boom, you got an X amount of fine, and you can call them up. I don't know, you guys maybe have the same issue, but yeah, it does take some questions.
Mm-hmm.
Well, that's exactly the point. So the fact that everything that we're looking at is old, is lagging, is completely irrelevant, because nobody wants an academic exercise with no economic value. So when people reach out to me, I think it's really important that they get an instant analysis of wherever it is they're looking for. And my market in particular, there's no more land to develop. So there's 2.2 square miles of land that's zoned for residential in the entire county, but it's not neatly together. It's little slivers here and there that nobody would ever want to develop in the first place. So there's massive demand. There is no more land to develop. And that dynamic is always going to lead to increased prices until something breaks.
Yeah.
And something's going to break eventually.
Chris and Todd, you're talking about recent data, and I agree with you that you know, the MLS, ours is actually pretty good. We get it updated. We're fortunate we have an outfit here called the Cromford Market Report, and they pull and consolidate it for us and help us. But that's us, because we live and breathe and we see the numbers all the time. The public, their data is very delayed. So a lot of the buyers that we're experiencing right now are looking at the news articles talking about how bad January was. And it was. December and January were terrible. So when they first meet with you, they go, well, we should be able to pull the price down, right? Because I've read that sales are very bad. So you have to go, well, they were. And so we went through a period where, you know, you waived inspections, you waived, you know, your financing contingency, to a short period where the buyers came in and said, well, I'm not going to offer an asking price and I want everything fixed. And we're still weeding through that. because of lagging data. In other words, core logic, by the time you get their data, it's 45 days old at the earliest. So, that's something I think that it's great that we can get the data really quick, but the public just doesn't see it. So we have to.
And you're lucky if you get
educate
it quick. I tell you what, I think Zillow gets it quicker than we do. In fact, I mean, we have this thing, where we set people up on a search. Geez, I mean, if anybody really needs that anymore, I mean, usually they go to Trulia or Zillow or whatever, and they set their search criteria up, and they call up and they go, "Hey, can you show me this house?" Right? Because we're setting up the search, and by the time they get it in their inbox, it's in pending status. It's like, guys, this is like went on the market yesterday. Why are my clients just getting it today? But Zillow's grabbing this feed and pushing it out 7 seconds after we hit submit, right? But that's another thing in itself, But anyway, let's take some questions.
So, Chris, I'm going to start with you because there have been multiple questions talking about home insurance companies. So I'm going to address this first one. We've got Charlton Zimmerman. Charlton, thank you for your comment. Anyone that's got a home insurance company based corporate headquarters in Florida, change companies, even if you are in another area. And then I'm going to follow up with this one because this is the question. Hey, Chris, how do you feel about Florida housing market now that Floridians are basically going to have to replace their roofs every 8 years or else be dropped by their insurance company?
So the home insurance or the property insurance space in Florida is a complete disaster. Let me just say that first and foremost. It has gotten extremely expensive. I mean, affordability is a massive issue everywhere, but specifically in this space, there has been so much fraud that is inherent in the system that it's essentially driven almost every insurer out of the state. And the primary insurer in the state of Florida is now the insurer of last resort, which is owned by the state. It's Citizens Insurance. They just recently changed the legislation because they're trying to fix the problem. DeSantis is trying to fix the problem. A lot of people don't like him. A lot of people love him. What you feel about him is irrelevant. The truth is he's got to fix this problem because it's a disaster. But they've put in measures now to where the fraud is basically no longer exists. It's can't be done anymore. However, they just changed the law to where now every citizen's policy holder must have flood insurance, which is new. That never existed before. I don't live in a flood zone. I don't have flood insurance. Well, now I'll have to have it. And in some markets where it's more affluent, you can handle it. In many markets where you can't afford it, it's a massive burden. And they changed the roofing law to be, if your roof is over 15 years or 15 years or more, you have to demonstrate that it's got 5 years or more of useful life expectancy. And if you don't do that, they'll drop you and cancel you. And there's been tons of cancellations that have been sent out to citizen policy holder, or just really every policy holder. And they're freaking out. I get these phone calls all the time and they don't know what to do. The best thing to do is get a 4-point wind mitigation report. And what you may find is that you have more life expectancy than you thought you did. But a lot of times someone can come in there, a licensed roofer can come in there, make some repairs to the roof, get it to have some more life expectancy, but it's a problem.
Thank you for answering that. We do have another question here that it's for you, Nouné. I'm going to grab this one here. How about multifamily homes in Massachusetts?
Well, yeah, multifamily homes are great. I think perfect investment. It's the same situation with multifamily homes, unfortunately. It's if it's in really good shape, in a great location, they fly with multiple offers. But depending on the location, so very location specific.
Okay. And then we've got one here for you, Rick. Arizona is still affordable compared to many places, but not enough inventory to justify doing it.
Well, it's hard to use the word normal anymore, especially after what we've had. But if you just kind of shake out the funny years, and then realize that we had less population, we normally would have 27 to 30,000 homes on the market. Now, when we crashed in 2008, we had 58,000 homes on the market. And this morning we had 12,100. So it's not, there aren't enough homes coming on. So every 7 days we have about 3,400 new listings come on and about 3,400 go under contract. So we're not getting any headwind as far as more available homes for people. And one of the reasons that sales are dropping off is people are like, is my portal still working? You haven't sent me anything in 5 days. Well, there's nothing to send you because nothing's come up. And so when he's asking, but not enough inventory to justify doing it, do you mean not buy, or I'm not sure that question's really clear. Does anybody have a different read on that?
Yeah, I mean, I think inventory is definitely, yeah, it's bad. It's really bad. Yeah.
It's interesting to watch how much it spiked up as soon as rates went up. But when you think about it, rates have really only gone down maybe a half a point from that peak. And so that was just that run for the hills mentality that everybody just hurried up and went out and said, let's get these things off the market. And so now we're kind of waiting and saying, well, when are the Airbnb people going to start putting theirs on the market? Because there's oversaturation in that industry, especially in a town like Sedona, population of 7,900, 1,000 homes are short-term rentals. So
I tell you what, though, I think a lot of people selling their houses are renting. Here's the thing. With the inventory the way it's been, sellers do not want home sale contingencies. And what that means, guys, is that if you have someone that wants to sell their house and buy another house, whether they're going up or down or relocating or whatever, maybe they're going domestic migrating to Florida, but they have a house that they own. I can't tell you how many people that I know that are in this situation right now. I have a client right now that is going into a rental that sold his house. And so what's happening is, I think these short-term rentals are going to become the place to be because, they're selling their house. There is no inventory. They want to capitalize, if they can get that price. A lot of people are still thinking we've got tough times ahead. I happen to be one of those people. And for the audience and for the record, just so I could set the record straight, a lot of times you guys say, oh, well, I get these agents on here that believe exactly the way that I do. Well, clearly tonight we have some difference in opinion, and I'm not saying that I'm very happy with our guests, and they're very good, very smart people, and they're out there serving. But I have a different take on the industry that I've been in since 1989. I have seen ups and downs and job loss and recessions and things several times in my career. And as a contractor, I was affected by it in major ways. And it wasn't just the '08 crisis when I was affected by a downturn. It happened in the early 90s. It happened in the late 80s, early 90s, right? It happened around 2000. Where we had issues that affected the housing market or the construction industry, where builders just went out of business or they stuck contractors with a lot of debt. I've been there, but I think when we're looking at this thing, a lot of what we're looking at here is, I think a lot of people, I don't know what's going on because we have a buyer. They're said to be a buyer demand, and I'd like to show some stats here myself, and just kind of bring you guys up to date. I'm not a very techie guy, so I'm going to do the best I can here at trying to show you some of this data. If we can dive in, can you all see my screen there?
Yep.
We can,
Yep.
yes.
So this is Okay, good. So this is about as current as I think that I found on our MLS. This home demand index, and this is the Baltimore metro area. We'll kind of describe that a little bit, but a lot of people want to know, what's happening in that our audience want to know what's going on here, because we do have a lot of migration. In fact, we've had several calls today that from military families that are relocating here, and they don't have a place to go. They're staying in a hotel. And they're, like, we just want to rent something, we want to buy something, whatever we can find, but overall, I thought this was interesting in comparing year over year, and we're looking at April statistics. And by the way, guys, this is our busy time. This is spring, man. Boom. We're rocking, aren't we, everybody? We're rocking. We are just crushing it when the spring market. This is a time when sellers typically put their house on the market, because we know that once we hit June, sales prices historically come down. So sales prices go up during the March, April, May season. It's no surprise. A lot of people are looking to get moved over the summer while their kids are not in school. They have summer vacations planned. A lot of times if they're moving, they want to use their vacation to move. And then once we get in traditional real estate, fall, the holiday seasons come. I mean, people don't want to have people traipsing through their house to sell. So this is the hottest time in the market. But I thought it was interesting that we are in the Baltimore area marked in April slow with an 82 score. And, so when we're looking at this, this is buyer demand that we're talking about. Looking at historical, year over year comparison, again, we can see that when we're dealing with the last year to March of 23, we can still see that home demand index is way low than it was just a year ago. And, here we go. So you compared to the Del Mar, where the demand's higher, the Maryland Eastern Shore, very, very slow. And interestingly enough, what I was mentioning in the, at least locally here, is you can see this month, and this is April we're talking about, and then March, the prior month index, you could see here where the difference in the buyer demand and what they're buying or interested in. And our highest demand right now are condos above $375,000. So interestingly enough, a lot of people are going more towards that, multifamily building style. There's a high demand for that. But when we get into single family, I mean, you can see, my gosh, look at that left column there, guys, where it says, below 330, there's next to nothing. And, we start to creep up a little bit still on the slow scale for these single family houses. And then, sort of, this this information kind of supports it. But yeah, that's kind of where we are with that. I do have a couple other slides, but let's take a couple questions, Melissa, before we dive into that.
Yeah, I would like to get all of your opinion on Anthony. We have a question here. What needs to happen to get back to quote unquote normal inventory? And Nouné, I'm going to start with you on that. What are your thoughts?
So the interest rates have to go down, and that will bring buyers back, and that will bring the people who are on the sidelines not selling back on the market. They will sell their house, and they will have more confidence in buying, that they will find a place to buy. I think that's what it is, but it has to go through the process. It's not going to happen right away. The inflation was 9%, now it's 5%, so it's going in the right direction. But it has to go a little lower to make everything better, basically.
Rick, what
That's
do you
if
think
you
about
believe
that?
those numbers.
Well, it's a number that we're all waiting for. When does inventory go to normal? We saw it start to climb up there like crazy when everybody thought they were about to lose their equity. We thought, okay, here we go. I'd see headlines going, inventory's up 150%. And I go, yeah, I'm glad it is. I wish it was up 500. But I think it's a baby boomer dilemma. It's a demographic dilemma. It's, Baby boomers are the ones that are holding the majority of homes that normally would get sold, as baby boomers would either downsize or move to be closer to the kids. And so it used to be you'd have this 4 and 5 bedroom home, the kids moved out, you downsize. Now you're looking at it and going, I'm sitting here at 3% rate. I got more room than I need, but what the heck? I got room when the grandkids come over. I think I'll just stay. Until that changes, we're not going to see a lot of those homes come on. Now, builders have been behind for 10 years and they're trying to catch up, and they're still, new construction here, those home prices are going up at a 6% annual rate right now, while resales are not. But I agree with Todd that, sales are bad. They're low, but they just happen to be at the right amount with the inventory level we have to put on pricing pressure. But to get things to normal, if we have a real dip in interest rates, are we going to see normal? No, I think buyers are going to come out of the closet, and here we go again. I think we're going to have to kind of sit and wait for guys like me to end up in the care center, I guess, long term. Take me to the home.
Oh, goodness.
Chris,
well,
give me
people
your
are
thoughts.
aging in place. I think, and just to your point there, as far as people are aging in place. Look, we learned what happened during the pandemic. I mean, people were separated from their families, and lockdown. And I think a lot of people, they don't ever want to be in that position. They're trying to. They know mom and dad, age in place better at home. There's all kinds of studies going on right now with home hospital, where they're saying, hey, people heal better at home. So I think the issue really is, and not to kind of jump in here, but I think we've seen more houses. You struck on it, Airbnb, second home rentals. I think that with the 0% Fed rate and the unbelievably cheap money, it allowed people to invest in housing, in real estate. There's a lot of ghost inventory that's out there right now. People are, Chris, I'm sure you see it in Florida, buildings that are empty, right? Communities that, from snowbirds that are, coming back to the northeast from, they have this inventory that's just sitting there. And, I think a lot of people, we've had more money circulating than more wealth circulating, because it was the everything bubble. Everything was happening. Stock market, you're making money in the stock market. You were making money in the automobile industry. You could sell your used car or your truck, for $3,000 less than you paid for it 5 years ago. You could buy a house for next to nothing. You could do whatever, right? It was almost like the everything bubble. And, what happened was, and I don't think we've woke up yet. And, what happened was, we were recruiting people. We were, people were like, well, how much would you give me to leave my employer and come work for you? What's the sign-on bonus? Craziness going on. We have yet to see the tip of the iceberg of what is going to play out in the commercial real estate industry. This is going to affect businesses. This is going to affect jobs. It's all over the news right now. Regional banks are going to be in trouble, guys. If this real estate, commercial real estate side goes sideways on us, what's going to increase inventory? I guess knocking these buildings down and building housing, but then where will we work? Right. So, when we're looking at, what is the answer? We got to cut this red tape. We got to cut this stuff. We learned that in Lexington, Massachusetts. Now they're saying, hey, you can build in the populated cities. Everybody wants affordable housing, but they say, not in my neighborhood, right? Well, I don't want to build it here. Are you kidding? I'm not saying that for me. I'm saying that is the way that things are written right now. So, we need to get affordable housing. Back in the 50s, the late 30s, the 40s and 50s, we had a, modest 1,000 to 1,200 square foot home, 3-bedroom, 1 bath. Right, we all made it happen. We've gotten into McMansions. We buried ourselves in, this is a starter home. We've built a beast. We've built a monster. Builders aren't building affordable housing anymore because it's not profitable for them to do so. So, we've got, we have an issue. We need to look at this inventory that's existing. If we're going to continue to, I don't know. I mean, I think the issue is way bigger. And, now we have rents are going down. I don't know if it's happening in your towns, but rents are declining.
Not in my town.
They're
Not
going
here.
to. Yeah. Yeah.
So
They're
you
coming-
spoke
they're
of some
coming down
some
here
points.
slightly,
Nationwide.
so they're coming down.
So
here.
we got $3.4 trillion in debt. Real inflation is closer to 30%. I don't care what number they're publishing and talking about on a regular basis. Unemployment is completely underrepresented. They just touted some latest numbers that were supposedly great, but I did a little bit more digging into it, and I found that the hours worked is down by 1/10 of an hour. And if you extrapolate that across the whole market, it's equivalent to 500,000 job cuts. So so the Fed is doing exactly what they said they're going to do, and they do want to create more unemployment, but Biden's never going to admit that because he needs to get reelected. So it becomes this difference of narrative. But yet, to your point, Todd, commercial real estate is imploding. And the fear that I have around that and the uncertainty that exists in the marketplace from the consumer, which I don't hear a lot of people talking about, is that how much debt is tied to that? How many pensions invested into these triple A-rated investment vehicles and are going to, these buildings are upside down. Their balance sheets are completely upside down. There are no tenants, the subleases that exist in them. Once those contracts are out, they are not going to, they're not going to pay anymore. So what's the bank going to do? Well, they don't want to be in the real estate business. They're going to fire sale them. There is no market. So you get a $600 million building in California, San Francisco, that can't sell for 60. So, okay, that in and of itself is bad. But what's worse is the pension funds that, or whatever investment vehicles are tied to those markets, they're going to get crippled. And then what happens? More money printing, because the government's not going to allow for those pensions to fail. I mean, you saw what happened in France. It's no bueno. So that's just one sector of the market. Car repo markets, you mentioned it, Todd. I think there's something like 6,000 daily repos that happen every day. Well, the banks aren't selling them. They're not letting it hit they're not realizing the losses. If you think we have a liquidity crisis in banking now, wait till they start actually realizing those losses, because it's going to be a disaster. And then what happens? Well, more bailouts. So there is no good solution.
Chris,
it's going to, yeah.
Chris, you're a finance guy here. You were a stockbroker, right? So, I mean, do you think $4 trillion is enough that they set aside for the banks to borrow money at par? You think $4 trillion is enough?
No, not even close. And we've got this debt ceiling that's being negotiated now. So the good news is, as bad as our economy is, compared to the global economies that are out there, we're the worst leper in the leper colony. And so it's not good anywhere. But we're looking down the barrel of, we've kicked the can down the road nonstop since the last great financial crisis, since the bailouts. And you want to know when the normal comes back to normal? Never. There is no such thing as normal. So in Florida, the supply side has normalized, but it's certainly not normal, and it's a problem. It's scary.
Yeah.
I absolutely agree, Chris, and that goes back to what I said when we first got started. The debt bomb has been lit, but I don't know how long the fuse is, because you can see it right now. They won't even negotiate spending cuts on any level. They just want to raise the limit and just continue and keep going. We've never had to unwind from this much money that's been injected into our economy, ever. You just look at M2 and you look at the graph, how high it went, and now they're trying to pull that back, all this money that's in the economy. That doesn't happen in 6, 8 months or even 18 months. So we could be walking down this can kicking road for another 5 years, and then everything really goes to hell. Or it could happen sooner. I just don't know. But none of it in the future looks good. Not to be a doom and gloomer, but there's way too much debt and too many issues within banking and pensions. Oops, I'm glad you brought that up. That I don't think people are aware of. So will that affect real estate? Absolutely. This year, nope.
And I agree with you. And I think what you're going to see is the bubbly markets get bubblier. And that's scary because if you think it's unaffordable now, I think that's going to get worse. I think we're going to see more liquidity injections. I think we're going to see more money printing. And I think we're going to see our economy get softer and softer and softer until something has to change. And it only takes, most people don't change and most governments don't change unless there is some sort of real fatal thing that makes them reevaluate everything. And I don't want to be a doom and gloom guy. I'm not. But right now in Florida, there are no distress sales. Period. It's very few. It's maybe 0.5%. It only took prices set on the fringe. It only took 10% of the overall market during the great financial crisis. I think there were 180 million sales and 18 million of them were distressed. Well, that's 10% roughly. It brought down the market, and I'm talking about the big macro number, 30%. Well, it's going to be much worse this time. It has to be. Just, it's not a matter of if, it's a matter of when.
Nouné, what do you say about all this?
Yes, I think the prices are not going down anytime soon. So it's going to keep going up and up and up because of all the reasons Chris and Rick mentioned. And we don't see a lot of foreclosures and short sales here at all. It's a very, very, very small number. And when that will happen, I don't know. But hopefully it will not. Let's keep positive, but all the indications are there that it will.
Well, Ben Bernanke way back in the day,
here. Go ahead. What were you saying?
Right before the great financial crisis, Ben Bernanke addressed the Congress and talked about the strength of the economy and that the real estate market has never crashed. And because it's never crashed, it would never crash. And that is the absolute wrong thing. Just because something hasn't happened yet doesn't mean it's not going to happen. But I agree. I mean, when I talk to clients who reach out to me, the first thing I want to know is where they're at financially. And I'm going to do a deep dive with them to make sure they understand what they're signing up for. They understand what the obligation that they're committing to is. And if they can afford it and they want to live and max out the freedom of South Florida, they can choose to do so. But I want to make sure if they buy this home at the absolute top of the market today and tomorrow it goes to zero, are they still happy with the choice they made? And if the answer is yes, well, then good news, because the market's not going to zero. But over the course of 10, 15, 20 years, supply and demand will do its thing and these things will be sorted out. There is no more land to develop down here. So over time, the future looks bright in terms of appreciation, but near term, there is likely going to be extreme volatility, the likes of which we've never seen before. So yeah, I feel the fiduciary responsibility, although I'm not a fiduciary, to at least inform and educate and let people know what they're signing up for. Because if they think that this is a one-trick pony that only goes up, well, sorry, folks, that's not the way it works.
Let's take a look at some charts. So, guys, we cover about 9 markets here in Maryland. And I just want to kind of show, because, we're talking about a couple different things. We're talking about prices not going down, maybe not going down. Well, I'm going to tell you that we're starting to see some prices going down. And we see it here, where, yes, things are still selling quickly, but we are seeing where in certain markets things are changing quickly too. One of the big things is that we're not seeing a lot of the list prices or the craziness. If we see something going for over asking price, depending on how it's priced, I'll give you an example. I had an agent tell me that the listing that someone was interested in was underpriced about $200,000. Of course, it went under multiple offer situation and went over asking price, but that was because the agent was pricing it a lot differently than where they were pricing it a year ago. If I went on a listing appointment a year ago and I talked to a seller and I said, yeah, I think your house should be priced at 575, they'd say, great, let's list it at 625 because that's what I think we can get. And you're like, okay, well, 575, 625. All right, well, let's list it at 625. People were flocking going, I'll give you 10% more than 625 because that is the list price. And we know that nationwide, people are paying over 10%. But what they didn't realize was the house was way overpriced and it wasn't appraising, and people were needing to bring money to the table because it was sold for more than it was worth. Well, here's the thing, guys. We're not seeing so much of that anymore. People don't want to pay over appraised value. They may negotiate a higher price, but they're beating people up in the, inspections if they, can to get the house under contract in a lot of situations. But let's look at these stats real quick. We'll just breeze through these. Q1 2023. The big discrepancy that I have is that the graph doesn't match the top part, which is, another issue that, we take up with getting the data. But I want to focus on a couple different things here, because I want to see that, like in Baltimore here, a median sales price year over year has dropped 7.6%. And the average sale price, 6.9%. But I want you to see that homes for sale year over year dropped 30 to almost 33%, right? Closed sales down almost 30%. Month supply, we're at 2.1 in Baltimore. That's about almost a 13% reduction in supply, and you can kind of see that in the gray and orange chart on the right hand side when we're talking about closed sales and things like that. Baltimore County, we're a little bit more a little higher priced. And you can see, again, they're saying median sales price has gone up 1.7%, but the graph here doesn't reflect that. It shows that, the median sales price is actually, dropped more than the 0.7% that is up top here. So, but still the point I'm trying to make here is that we are seeing here locally in a, what we had as a very hot market, for the last several years, we are really starting to see where, that is, changing significantly, kind of going along the, outside of Baltimore. Just to kind of go over a couple other of the charts here. This is, again, areas that we cover, Anne Arundel County, and this is sort of alphabetically here, Carroll County. They're not close to one another. But again, you can see where we still are showing, massive closed sales. I mean, down way low in first quarter. Anne Arundel County, 2,036. We're down almost 600 closed sales this year versus last year. And then same thing goes in Carroll County. So again, the chart indicators on the bottom shows that, we are seeing, Anne Arundel County, a little bump up from last December, where prices were down. We're seeing a little uptick there, but when we're looking at the historical median sales price for Carroll County, you can see price decline in that county as well. For those of you that may be watching that are in some of these other counties, Harford County and Howard County, same kind of thing. I mean, look at the volatility in this chart that dates back to 2010. You can really see the crash prior to that, right? So you can see how, the median sales prices kind of up and down, up and down, up and down, up and down, and certainly the last couple of years. But then again, the significant drop from a year ago, again, not reflective in the metrics above, but we're still where we were seeing 18, 22, 26% in certain markets, year over year growth, plus 1.7 in Harford County, plus 5.3 in Howard County. In Howard County, we have a lot of government workers as well. So, it seems that our market in Howard County, and we have an office in Howard County, stays a little bit stronger. Just kind of wrapping around DC a little bit. In Montgomery County, Prince George's County, again, looking at the orange and closed sales, still way down. I mean, we're almost, Montgomery County from 2,632 last quarter, 22 to 1,823 sales, way down. Look at this, homes for sale in Montgomery County, 775. at the first quarter of 23. But again, very low, even though you may see some moderate price growth in certain markets in the county, it's nothing like we experienced. But again, keeping focus, closed sales minus 30%. Your agents are in trouble. Mortgage companies are in trouble. Industry people, we're seeing layoffs in title companies. We're seeing layoffs in mortgage companies. People that are, when you're talking about sales year over year dropping 30%, guys, that's bankruptcy for, corporations. When you see, that kind of reduction in sales volume and only looking at a little bit of price growth. Here, interestingly enough, in Frederick County, one of the most expensive counties, I think, in Maryland, it may even be the most expensive as far as property taxes, as far as that goes. We're seeing price declines, 4.4%, median sales price, average sales price decline, almost 2%. Again, I mean, when we're looking at that, what we're seeing, guys, and, is buyers are saying no. I mean, a lot of buyers are just flat out saying, you know what, this is ridiculous. I'm not foregoing the opportunity of, being in debt, my debt to income ratio, going sky high because, I want to, say that I'm a homeowner. And so, yeah, that's kind of where we are locally. We're not seeing the massive price growth. And guys, we're stable. Back in 2008, we crashed some of the hardest in the country. I mean, we weren't like Arizona where whole streets were, I'm not Arizona, I'm sorry, Vegas, where, whole neighborhoods were literally vacant. You saw the streets were unoccupied. We didn't see that. We saw a lot of foreclosure here. But the big thing that we saw or experienced was that we were like one of the slowest in the country to recover. So some people that bought in 2006 did not realize any kind of price appreciation in their house until the peak of 22, June of 22. And I think the big thing here, the focus is that people have to realize if they're buying a house, and this is my caution, this has been my caution since day one, is that a lot of people with their mentality, and we know this, guys, being in the industry, that people move every 7 to 9 years. It fluctuates back and forth. The problem is the mentality of this, younger generation is, well, I don't want to be stuck here for 9 or 10 years. They want to be transient, be able to move, see the world. And people are buying these houses and are realizing, hey, I may only be here for 3 years. They're going to be upside down. You need about 10% equity in your house in a lot of the states to just even come out of pocket, to not come out of pocket for more than you paid. And a lot of people say, well, they put, a lot of money down and things like that, but it still doesn't mean that they made out, the cost of, they say, well, it's cheaper to buy than to rent. Not if you're going to move in 3 or 4 years, I don't think. But anyway, what are your opinions on that? We'll start with you, Nouné. How about these people that have bought in the last 2 years? If they sell, are they underwater in your town?
Well, it seems like my town is completely different from everybody's because right now what we're seeing is appreciation and very strong economy. And it looks, I don't know what will happen in the future if something major happens and it crashes. Of course, everything will change. But right now, everything looks like it's still appreciating. We don't see in that area where I work in Boston or the close suburbs, we don't see prices softening. Of course, if the house is not in perfect condition, yes, that it might stay on the market and
give me a scenario. So let get
sure. So
give me a scenario if you would. So I come to Lexington or the metropolitan area.
Lexington.
And what do I need to spend to get a? Yeah, what do I need to spend to get a nice 3-bedroom, 2-bath home, detached?
1.7
million.
To pay? 1.7 to 2 million.
No, 1.7 million.
If
All right, so I buy it.
Is the basic no bells or whistles, a basic house in Lexington, Massachusetts, we're talking about 1.7 to 2 million. If you're going a little larger, then
Okay, I buy a 1.7. Do I need to spend money fixing the house up?
well, if it's like 1900 square feet house, no. It probably is in pretty good condition. I had a listing.
1900.
Yeah, 1900 square feet.
Wow. And
So-
people think Phoenix is
Small.
expensive.
For 1.7 million. I want a 8,000 square feet.
Yes, the prices are crazy in Lexington. Lexington is one of the most desirable places, suburbs, because it has amazing schools, public schools. People are moving to Lexington just because of public schools. So it's the biggest draw. So I had a listing.
I have a
just
one.
couple
I'm going to buy.
ago. Yep. Go ahead. I had.
So I'm going to buy 1.7 million. I'm in.
Yes. Okay.
So what do I have to do? Can I get inspections?
No. You have to waive your inspection, your financing.
Have an inspection.
No inspection, no financing. Cash is preferred if it's probably proof of funds, and you probably have to go even higher, up to 2 million, depending on the location. If it's a quiet street or if it's I don't know, close to the Lexington Center or something like that. So it's tough. I had a listing just 2-3 weeks ago. It was a townhouse.
I'm going to buy it. I'm
Yes.
going to buy it.
Sure. Go ahead. You're
I'm in.
buying it.
2 million, no inspection. Buy it. In fact, I'm just going to write it. I'm going to wire the money. I'm not going to look at it. I don't even need to see. I'm just going to buy it. I'm going to
Sure.
move in there. And in 3 years, though, I want to tell you, Nouné, in 3 years, I'm relocating. I have to move. I have to go. I have to relocate. I'm only going to be there for 3 years. Are you telling me that I'm going to be good? Am I going to get back out of this place in 3 years?
Not in 3 years. With the cost of agent fees and all the rest, probably it's possible that you will lose a little bit of money, even though it's appreciating. Lexington, Massachusetts, the prices are still appreciating. But will you gain money? I don't think so. If you wait maybe 5 years, it's possible. I don't think, because of such a diverse industry in Massachusetts, and even in 2008, actually, some of the suburbs, they didn't lose a lot of value. It's surprising. But it's a very steady income. It's not like Las Vegas or like Florida, when, prices went 50% down. Ours was very slight in those Boston and the close suburbs. Further away, let's say central Massachusetts or West Massachusetts, that's totally different story. But in Boston and close suburbs, it's very hot, basically.
Can I jump in?
I believe your buyer demand is so high. Who can buy these houses? Is it millions cash, no contingencies? I mean, you must have like a population of 1,000 or something in the whole. I mean, I don't.
How do the teachers afford to live there?
They
That
don't
was one
live
of the questions.
They don't live there. They live further away and they commute to Lexington, or they have significant other with bigger income. Lexington is a very affluent town, and well, it's not representative of the whole Massachusetts, of course.
So what I just heard was called the wealth effect.
No wonder they said that they're going to pass laws.
Yeah.
High net worth people and even everybody right now feels wealthy. And so, Todd, if you ask me, and Melissa, if you pull up, I think it's the Delray Beach slides, if you can. If not, I don't need them. But if you're going to buy a home and you are uncertain about your financial future, I'm going to root that out. So if you tell me that your timeline is 3 years, I'm going to tell you exactly what I think. Again, I don't know anything. I'm not an economist. But look, last month, month over month, this is March versus February. This is dated. Oh, you can go back to the other one. That's okay. This is Delray. But you can see the average sold price is down 36%. And then in April versus May, it's up 7.4. Well, we haven't seen that kind of volatility. I haven't seen a 36% loss month over month since my stockbroker days. I haven't seen that in real estate ever. But for the first time, we saw that in Delray. And we saw that in Boca too. I think it was close to 20%. And again, there's not a pattern. It hasn't happened, in any series of consecutive months yet, but people feel wealthy. They feel protected. They look at their stock market account or they look at their other accounts, so they feel wealthy. And just like Ben Bernanke said, everything's fine, nothing to be worried about. We've never seen it before. If your timeline, given the global economic situation and the U.S. economic situation, if you can't afford to hold that home and you don't know that you're going to be in it for the next 10, 15 years, don't buy it. I would warn you, I would tell you not to buy it. And you could come back to me and say, Chris, F you, I'm going to buy it anyway. Okay, cool. I'm not the boss, you are. But I'm giving people really hard facts, or not hard opinions. They're not facts because it hasn't happened yet. But I've seen this movie before and I know how it ends. So when I hear, I live in an affluent area too. The average sold price in Delray, you can see what it is. And the active average price is 2.1. So we're in similar markets. There's lots of affluent people here. I know lots of affluent people who make a lot of money. They make $1 million or more a year. But if you make $1 million and you spend $1.1 million, you're in the hole $100,000. And there's lots of people who have been living off this easy money and fast economy for a long time. When they get squeezed, and people are going to, they're going to get squeezed. And that's when you start to see supply change. And I'm not knocking you at all. I'm just saying that's what happens. People don't think it can happen. It can happen. It will happen. I don't know when. But to that point, there are institutions that are capitalized right now, sitting on the sideline, waiting for it to happen. And I don't even know that these distressed or what soon will be, like the REO market that used to be, I don't know that it's going to hit the MLS the way it did last time. I don't know that these hedge funds or institutions or private, whatever it might be, I don't know that they're not securitized or sold or whatever. I don't know that it hits the market the same way. So it'll be interesting to see, but I don't know. When I hear people say things like everything's great, it's great until it's not. And again, I still believe that my market is more protected than other markets. But that doesn't mean that when the tide goes out, all boats don't go down. They do.
Right. The commercial real estate is in really bad trouble. So we'll see what happens.
Yeah. But also,
Nouné, do you have
a
vacancies?
Do
you have commercial vacancy?
I don't do commercial real estate really, so I'm not that.
But when you're driving down the street. When
No.
you're driving down the street, do you see for lease signs? Do you see empty buildings?
Not empty buildings, but yeah, sometimes it's not that prevalent. It's not like, oh my goodness, this is going down. There is no feeling like that. Not yet, anyway.
I would be shocked if there's
How
not
about you,
private
Rick?
conversations happening.
I'm sure.
How about you, Rick? If I bought a home in Arizona, am I safe? Am I going to be able to make sure that I don't lose any money?
Well, look, not even the big guys get it right? Zillow, CoreLogic, Realtor.com. I turned down 2 offers to help purchase a home last year for 2 young men. One was a friend of the family, and he was making a lot of money as a loan officer. He was raking in the money, and he goes, Rick, looking at this $1.1 million home up in Scottsdale. And I said, no. He goes, what do you mean no? I go, I'm not selling you that. I go, your business is not going to be flying like it is right now long enough to sustain you there. And he goes, well, I've saved $600,000. I go, well, let's find you something for $600,000 in another city. I said, at your age, you should not be strapping yourself out that far. It turned out to be a really good decision for him. Another was a military guy. He goes, I don't think I'm going to be here more than 2 years. What do you think? I said, rent. I said, because, the odds of real estate really going up to where you'll make money at the end of the 2 years those odds are getting lower and lower every day. If you were to come into Arizona right now and you wanted to buy, and here's the hard part, I'm looking and going, that house is 600,000, and I got buyers going, holy cow, it's expensive. I can go, well, in Lexington, they're 1.1 million. But our income doesn't match that. So eventually affordability hits a wall no matter what. And it will slow things down considerably. And we're seeing some of that. I think the short answer is, I don't think there's anything on the horizon that's going to make home values go up fast again, unless we see the Fed open up the floodgates again. Then it's open up the gates, go for it. If they get in a situation where we've got quantitative easing number 10, then yeah, buy your house. The calamity will come
I have
later.
I don't know how you guys, I don't know how you guys are doing on, your local economy as far as, jobs and things like that. But a lot of people here, I have two friends of mine in construction type industries. One is a supply company and another one is a concrete contractor on a pretty decent scale. And it was interesting because this week alone, I talked to both of them. And the one told me, the one supply that owns a supply business, caters to, contractors, told me that for the first time in years, he's like, I don't want to admit this. He's like, but I honestly, now I'm seeing what I didn't think I would see with the slowdown. He's like, I mean, it had to come. He's like, but we were really crickets compared to where we were just a month ago. And, and so I thought that was kind of interesting because, we're all talking about, the housing industry and look, we've had so much stimulus and so much, money that's been circulating around and we, Chris, you said it, the real numbers are probably much higher than what we're being told, 30% maybe inflation. Job growth is, wages have come down. The pressure is on the employers right now on jobs. And, and the other one is, my concrete contractor buddy said, what, we're busy as we've ever been. He does a lot of, government contracting and stuff like that. He said, we're busier than we've ever been, but our material costs are going up every single day, it seems like. And the end user is squeezing us more and more and more. So they're fighting for such thin margins, such narrow margins, that it's a question as to whether they can even make money. And he was just rattling off, his costs and his equipment costs and the machines going down and things like this. So, and then the third thing I'll add there that has happened, because I've been a contractor since 1989 and have been in this industry for a long time, right? So I am seeing where I'm getting calls by subcontractors and people looking for work now here locally in Maryland that I would not have been able to even get to take my call a year ago, right? And I connect a lot of people, with clients and people that are renovating houses and things like that, and couldn't even consider it. And I'm getting people that are calling me now saying, hey, looks like my schedule's opening up a little bit. Do you know anybody that needs some work? These are just things. Look, I like to think that we're just going to keep blasting through this. But we did just have a 1/4 point hike. We've seen the fastest rate hikes that we've seen in decades. Whether it cools off now or not, I think now the catch up. And you're right. I mean, Chris, I think you said it. I mean, we have election year coming up. I've said it many times. They're going to kick this. They're going to try and preserve. No one wants to see the economy fall apart right now with this big year coming up, right? So the question is, how are they going to do it? I don't know.
Well, the good news is
Some more
CPI
questions
comes
before
out
we-
tomorrow. And if inflation was to come down with housing,
Do you
then you're going to
believe the
see mortgage
CPI
interest rates
numbers?
drop. No, but I'm just
Do
saying
you see?
if they can illustrate a point, if if the CPI numbers were to indicate that they're starting to relent a little bit, you're going to see mortgage interest rates come down. And the number that I think the consumer really is looking for is somewhere like 5.5%. If
Yep.
they rig the system to get the 5.5%, then Rick is 100% right. It's off to the races again. But it's not real. It might I mean, equity isn't real. I always say this. Equity isn't real until it's realized. And so I don't know what's going to happen in terms of pricing, but I do know if they make money cheaper, we're going to be off to the races in terms of demand again. And what does that look like? Well, it looks great for the industry short term, but it looks horrible for the rest of the country longer term. And so, Rick, I love that you talked your friend out of buying because you knew it didn't make sense. There's 40,000 agents in my market, only in just Palm Beach County. Only 1,000 do 10 deals or more a year. So there's 39,000 people that are at risk of God knows what. I don't know. And I don't know what the price points of those 10 deals are. But there's a lot of people that can barely feed themselves within the industry. And that's on a good year. Now that there's 30% less transactions, it looks very different. So thankfully, I'm not one of them. I do very well, and I know everybody here does too. But there's, from a real estate side, there's no such thing as a bad market. It's always a good market for someone. So we can always pivot. But that's not the case for the consumer. The consumer is left holding the bag, and I've got real reservations as to what's going to happen in the next couple of years.
Chris, thank you. I don't want to interrupt you. I just want to get to a couple of these questions. Time is moving right along. We have a super cash here from Kevin. Thank you so much. Greed has taken over. I hate to be the realist, but the term affordable must be redefined.
What's up, Kevin?
Thank you. Thank you so much.
Oh, Chris, you know Kevin?
Yes.
Oh, love it. Yay.
Yeah.
Awesome.
Yeah. Kevin's great. He's got a channel too. He's
Oh,
he
cool.
also he's one of the creators out there that's sharing the truth about what's happening right now in the economy and things like that. And so
Awesome.
I think there's one of the reasons I love this channel so much is you guys play it straight and tell the truth. And there's so many other creators out there that are just pumping what people want to hear and makes tremendous views. I'm sure it does great on YouTube, but it's not what the consumer is actually going to experience in real time, at least in my market.
Well, thank you, Kevin.
Chris,
Thank
we
you
made
so
a
much.
decision, and I appreciate that. Yep, and Kevin, definitely, thank you so much. But Chris, we made a decision, and I don't want to be right. I'm not trying to be. I don't want to be right, the right guy. I don't. All I'm doing and all I have been doing is just trying to make sure that people are educated and know what they're getting into, because there is so much out there, pressure. Look, the real estate agents aren't very highly regarded on the popularity poll. Okay. We all know that everybody knows a realtor, but I think we get a bad rap. We all know there's, not the highest bar to entry, and, everybody, like I said, knows an agent. And when you're talking about agents that a lot of them are part-time, and I'm not knocking them, whether they're dual career or part-time. I'm just saying that this is the type of industry that is the most expensive freaking purchase that people make in their lifetime, unless you're buying jets, and then that probably isn't as expensive as your house at that point. But what I made a decision when I opened up Sachs Realty, and we haven't been around that long. We started in 2017. I've been an agent with bigger brokerages and two other brokerages, and I had a team at one for about 10 years or so. And my point is that we decided that when I opened up Sachs Realty, I was going to be a B2C business. A lot of people look at the real estate industry, a lot of brokers look at the real estate industry, and here's where, I may lose some subscribers, but they look at the real estate industry as the broker's client is the agent. Okay. It's a business, right? It's the broker's client is the agent. The broker's client is not the consumer, and that's not the way that we operate. Okay. We believe brand does matter. I believe that we are a business to consumer business, and that means the agent helps us to facilitate that. I am very involved. And so, we've got something when you become licensed in the industry, you know that everything belongs to the broker. You are a independent contractor to the broker. We're not playing this game where we want to be, cater to the agents. We want to cater to the consumers. And with that means we give them the information that a lot of people, they don't want to talk about. And, and a lot of that, guys, means that, some of these, we're like, why are you telling people that? Why are you giving this kind of information? Because they need to hear it, right? This date the rate, marry the home, date the rate,
Oh, I
you all
hated
have heard
that. Hate that.
right? You all
Hate
have
that.
heard it. Yeah,
You know what
you've
you
all
know,
heard
and you
it.
don't know
These
what
people,
you don't know. So
look, we had a home inspector that was on the channel here, and maybe you guys can relate to this, but the home inspector, and the video can be found if you go to our channel and search home inspection. We have a couple videos on home inspection, and the agent was talking about the buyers are listening to these, or not the agent, I'm sorry, the inspector was saying that they were doing these walk-in talks, going through, doing a walk-in talk. Hey, couldn't get an inspection, but I want my inspector to be there looking at the house. And the inspector was pulling out like critical information, critical repair work that needed. And the agent was going, don't worry about that. I got a guy. Don't worry. That's what the inspector said. I don't know. I wasn't there. But I'm thinking to myself, are you freaking kidding me? I mean, like, I hope that you got a guy that protects you when your client sues you. Because, you encourage them to not make it a big deal, and they moved in and ended up with a $25,000 repair 3 days into their purchase after they used all their cash. So that's why we do what we're doing here right now, is to try and let people know it's okay to rent. It's okay to not be a homeowner right now. It's okay to save up 6 months of money before after you put your down payment, you have some reserves. It's okay to make sure that your job is stable. It's okay, right? That's the narrative that we need to be pushing instead of fear of missing out. Don't get caught. Make sure you get an exuberance. Let's make sure that we sell this thing for the maximum and buy it, because you're not going to get it otherwise unless you spend all your money. So anyway, enough of the rant. But Chris, I appreciate what you're saying, but that is why we do what we do. And I think my internet connection is terrible tonight for some reason.
Well, I appreciate that you do that. And so in the financial services industry, there is a know your customer rule, and you have to understand what is suitable for them in order to make an investment recommendation. And so that does not exist in the real estate community. But I've taken on that personal expectation to myself and my team, where when somebody is looking to buy a house, I'm going to get to know what is right for them financially. And thankfully, everybody, I've yet to have anybody who has pushed back on that. If it's not right for them, don't buy the home. And it's that simple. I'm not going to tell people what they want to hear. I'm going to tell them the truth. And if they don't like it, well, that's fine. You can go find somebody else. I never talk, and I don't think anybody here does this either. I'm never going to talk somebody into buying a home. It's impossible. I will tell them to not buy a home. And then if they choose to do so, well, God bless them. It's on them. It's not my money. It's not my choice. It's not my house. But I know that I can sleep well at night and look myself in the mirror knowing that I told them the truth. And that's how you build your brand. That's what you've done. That's how you have long-term trust and build real relationships within the industry. And you'll have longevity. But any other way, it's just a flash in the pan, and you'll probably be in another career very soon.
Yeah, I had a guy call me, about 6 months ago, and he told me what his rent was, and he wanted to know if I thought it was, a good time to buy. And he was telling me his financial situation. Guy was making boatloads of money. His rent was something like $700 a month. I said, I think you already know the answer to this question when you asked it. I go, stay put. I said, everybody else is buying because their rent's going through the roof. I go, you've got the perfect storm. You're saving all this money. I said, so if the market goes south, you're ready. I said, if it goes up, you're not out of reach because you're salting so much money away. I said, stay put. Do you like your landlord? He goes, yes. I go, don't move.
Yeah, definitely.
That's
I mean,
awesome.
$700.
Melissa.
Yeah.
Mm-hmm. Yes, we got some.
I want to jump in here real quick, Melissa.
Oh, go ahead.
Yeah, let's. I just want to jump in and say thanks to our. We've got some industry friends here, some fellow YouTubers.
Yeah.
I don't know, you guys may even know them. Let's talk about him. Orlando Minor, big shout out to him. He is a friend.
Big shout out.
And thank you so much for your support, man. Your continuous support. If you guys don't know who he is, check him out in his channel. He does a lot of commercial real estate. Gives a lot of advice on the commercial side of things. He has CCIM, which is, man, that's a hard designation. You can't fake that stuff. So we talk about, agents having low barrier to entry to become an agent. There's no low barrier to entry to be a CCIM member. Orlando Minor, let's just big shout out to him. Thank you so much for your. If we could pull him up here on the screen. And we appreciate him. Thank you so much. And the next one you guys may know is our buddy Travis, Real Estate Mindset. And Travis has this guy we talk. I've been so busy, man. These guys, I'm surprised they still are, listening, tuning in here, because I've been like vacant in talking. And we've got a group chat that we, always talk all week long. And it's funny because the last time I logged in, I saw that Travis said he catches these big sharks. I think he puts them back. But he had this like massive hammerhead shark, and him and his buddy got their arms around him, and pretty cool stuff. But shout out to him. Thanks so much, Travis. We appreciate your support as well, man. Great channels here. I don't know if you guys are subscribers to these two guys, but we've been very dedicated in trying to be consistent in bringing data to our audience. And we love you guys. This audience is so amazing. You guys are the most amazing audience on YouTube, and we appreciate you tuning in. Melissa, did you say that we were approaching like 150 episodes?
Yeah, I think we're like, I feel we're like at 143. Could be tonight. So yes, I know time is flying.
That's crazy.
Yeah, it's crazy. And so awesome too. I mean,
when we started, I mean, we had like 6 people watching, right?
I know.
And everybody would be like, Todd,
I know.
Todd, how long are you going to do this, man? Like 4 of them are your agents. I don't know who the other, I don't know who the other
family
2
members.
Were, like,
I don't know.
People watching our show are like,
yeah,
we love it. If we get one person that can benefit by what we're saying, we are doing the right thing.
And you also used to be so nervous,
show,
Todd.
you guys.
You were also so nervous before the show started. Now it's just another day. That's what it is.
I would hyperventilate, man. I would
I know.
Go into like panic mode and
I remember.
walk around the parking lot and pretend like I'm smoking cigarettes or whatever,
Yep, that's right. And we'll be approaching, it'll be 3 years in August. So yeah, it's pretty awesome. It's pretty awesome, and pretty awesome to meet you all too. I mean, it's really cool to meet other people in the industry and YouTubers who you're doing it, you're posting often, regularly, and it's a lot of work. So we recognize that 100%.
Well, this is the 143.
Just kind of
All of us talking together like a chorus.
We'll wrap up, but look, we'll go around, and guys, we will make sure that all of your show notes, guys, these are dedicated people to the industry. They are, giving great content on their YouTube channels, and I'd love it if you guys would cruise on over to their channels, check them out, subscribe to them, let them know that you watch them on Sachs Realty. There's Rick's channel there, and we'll let these guys go around and kind of. I'm sure Joe's going to be pulling up some screenshots of the channels, but we'll start with Rick since Joe pulled you up. We thank you so much, man, for being on our show. We love having you, Rick. Any parting words? Anything you want to say?
Well, this was a bucket of fun. I appreciate it. It's fun to talk to everybody in the industry, and we're not all going to have the same opinion, and and I try not to project out more than 3 months. So it's a real stretch for me to kind of say, well, in a couple of years, because it's tough to do. So I've been on YouTube now about 2.5 years aggressively, and having fun doing it. My channel is right there. It's called Rick Helps. So I'm going to be, this is day one of my trip north. I won't always have this, like I'm under radiation therapy glow to me, but I'll be kind of chronicling the trip as I head up to Washington State, but keeping everybody up to speed on the Arizona real estate numbers. I don't want to drop doing that, but we're just going to mix a little fun in with it this time. So
Awesome. Definitely. Let's go to Chris. Chris, thank you so much, man. We appreciate you being on the show.
I love it. And so if this is in fact the 143 episode, that is the I love you. I think old school text or whatever. So I'm going to say I love you to the audience. I love you to everybody on the channel. Thanks for being here. Thanks, Todd, for putting out such great content. I've watched you for a while. And Orlando and Real Estate Mindset. I watch both of your channels. I'm subscribed to both. You guys put out great stuff. So would love to do a collab or hook up with you in any way I can. But thanks. It's been an honor to be here. If I can help anybody, please reach out.
Awesome. And Nouné, thank you so much.
Oh, yeah, this was a lot of fun. And thank you again for having me on this. This was a lot of fun. And it's so interesting to hear what other agents are experiencing in their markets. It's very different. And I'm sure what I told you was kind of shocking. But that's how local real estate is. So everything is so different, especially now in this day and age. Real estate is extremely local. Everything changes. If you drive 10 minutes away, all the rules are changed. So thank you so much. Really had fun. Hope to do this again.
Awesome. Yeah, it was
Yeah.
a lot of fun. Melissa, thanks so much. I see Melissa Levy 4. I mean, is this like a new
I don't
name
know.
card or something?
I
mean,
don't
is this
know.
like,
We just roll with it.
I don't know.
I have no idea.
Huh?
It's okay. Sure.
Wow.
Why not? We'll
There
just-
it goes. Oh, it's gone.
It's
I
like
think somebody's
special
messing with you.
ops or something.
Miss
I don't
Joe's
know.
in the back.
Yeah, just doing the editing in the back. But yes, I don't know. But anyway, you guys, thank you. Thank you so much. Thanks for taking the time and preparing, sending us, all the current data and stats. It was an awesome show. Very appreciative.
Thank you.
Thank you.
all right, thank you very much.
All right, guys. Well, there you have it. I hope you enjoyed this episode of our Tuesday night podcast. And guys, if you're not subscribed to our channel and you want to be subscribed, go ahead and do so now and smash that alert bell. You'll know every time we upload content just like this. And we've got some really cool stuff happening too. We'll just talk about it really quick. We have a brand new website that's getting ready to launch. A lot of people are like, your site's terrible. And we know we haven't done anything with it, but we've got a really cool site that we've been working on and we're really excited to bring it to you. And you guys are going to love it. I promise you. And we're working on a podcast studio as well. And we'll have a couple different sets. We have another channel called Real Estate Agent for those that are in the industry. We are stacking content for that. We are getting ready to start really hot and heavy. If you haven't done that, you can cruise all the way down to the bottom of our channel and you can see the Real Estate Agent link there. You can click on it, subscribe to that. If you're in the industry, you're serving the industry in some way, title, mortgage, we're going to have a lot of great content on there for you on that. And thanks so much, guys, for a great show. And we love you guys, and we'll see you next time.
See you next time.
Todd, you